retail investors have two big advantages. One is concentration instead of diversification. Retail investors are not in a bubble. Like if you're starting from 1,000 euro and want to make it 1 million, you cannot diversify. I will say in the next 5 years, I'm expecting a 5x.
So, like, before we start and move on to the podcast, actually, I think it is essential for me to just give like a little backstory to how we met. So, we actually met from a mutual friend of ours, and he told me like very impressive stuff about Marco, few of which we're gonna talk about today. And he just went on to say, oh, he does investing, he has a podcast, he's a finance expert, and then he also said many kind things about you, and that's how we actually met. And then we thought it'd be a great opportunity to like present these ideas to the people who are watching today, and that's how we came about with this podcast. So thank you for coming, thank you for being with us today.
Yeah, thanks for having me. It's the first time I'm like a guest in a podcast. I used to be the host, so it's a new experience for me. And thanks Harsh for all the love. I don't, but I think when he said finance expert, I think he was a bit exaggerated. But
No, I think there's like a little bit of false humility there, but honestly, I think there is a lot of things that we can learn from you today.
hopefully.
Maybe. Okay. Maybe like just to start off, why don't you like tell us a little bit about what led you here, what led you to pursuing finance at Bocconi, why choose the dark side?
Yeah, yeah. So my story is I think it's common for many of our classmates and of all the people that decide to go to Bocconi. I mean, it's the same. My story is the same as Arsh's story, the mutual
Okay.
friend of us. Yeah, so I decided to go to Bocconi because it is the best finance school in Italy. And the reason why I was interested in finance was because of essentially it was because of the movie, The Wolf of Wall Street. So
Okay.
when I was 13 years old, I watched the movie, and it was the first time first time that I could see like how the finance world theoretically will be, and I mean I fell in love with that. A bit of a sick word, but yeah, I was really excited, and then after watching the movie, I just used my phone, went online, looked for the best finance school in Italy, and Bocconi was the first one. So I decided when I was 13 years old, I decided that in the future I wanted to go to Bocconi, and that's what I did.
Okay. So that's like a long process in the making, right? Since you're
Yeah.
13 to all the way until you're like 19, 20, just to make your dreams come true.
Yeah.
Okay, so is that one of the reasons why you got into investing, and why you chose maybe like stock picking as one of your like side hobbies?
Yeah, I mean, it's a bit of a mystery for me as well because I I don't think I remember the exact moment where I learned about investing and stock picking because I mean, since I was a child, I knew that this word existed, right? Uh, because my dad, my granddad invest for as have been investing for quite some time. So I knew this was a reality. And then I guess I started reading a bit, and my fascination increased, and here we are. I think it's best in investing. it's great. I mean, I love it. So
Okay. So what was it that point where you decided, okay, I need to start investing? Like, because you're just in your 20s, right? In your early 20s. Like, at what point were you like, okay, this is the time I need to start investing?
hmm. mm, I will say, uh, yeah, 15 years old.
Oh, okay.
15
So you
years old.
started investing when you were 15.
I started like to learn
Okay.
the just the ground, the basis. The first book I read was when I was 14, 15 years old, and it was it was quite a bit too difficult for me. I remember that I didn't understand much of the theory behind it because one yeah the second book I read was the Big Short, and I was 15 years old, and I didn't quite understand many of the concepts there. Uh, yeah, so but yeah, then I started investing when I was 17 years old, and I had to do
Okay.
it with my mom's account because since I was not 18, I couldn't open a trading account, an investing account with a broker or with a bank, so I had to use my mom's money
Okay.
and account. Yeah.
And what were the some of the few stocks that you picked in the beginning?
Uh, yeah, so at the very beginning, I still hadn't. I mean, I was doing more trading and not really investing. So it was the period where COVID just happened. There were a lot of people speculating about a recession coming, and so I decided to to shorting the market. I remember I short the market for a bit. I
Okay.
so the reality is that my mom gave me 2,000 euro, right?
Okay.
And with Alpha, I decided to start this trading experiment that failed miserably, and I lost all the money.
Okay.
With the other Alpha, I decided to. I was following a Tesla at the time. I'd been following Tesla, and I decided to invest long term there. So I bought my first shares in Tesla there, and I've been holding them for until a few months ago, and then I sold them. So overall, I made my mom a good profit. But yeah, so Tesla were the first stocks I picked.
Okay. And what led you to pick Tesla? Was it something that was on a book that said Tesla is the one to go for, or?
Uh, yeah, so the reason why I'm still uh, positive about Tesla as an investment is because of the mainly it's because of the vision. It's because of the vision, of the mission, of the management team, and of the product, of the financial, obviously. But it's really about the vision. It's it in some way is a big bet. You are betting on this vision to materialize, but then it's based on it's not just based on hope. It's based on research, actual research. So industry research, competition, competitive advantages, and actual what is the company doing? Is it successful in doing what it's doing? And do you trust the management team? And I trust
Okay.
Elon Musk. So, I mean, if you don't trust Elon Musk, you probably shouldn't invest in Tesla. Obviously, that's the first thing. That's it.
Okay.
If you don't believe in the vision, so if you don't believe that they will solve autonomy and make robotaxi, you don't believe that they will make Optimus the robot, then you probably shouldn't invest.
Okay.
So
Okay.
you have to believe a bit. It's like
Okay. We'll delve deep into why you picked Tesla a little bit more, but before we go into that, maybe I think it's a good way to start off by just telling our audience like what like what were you mentioned that one of the first books that you read was The Big Short, and before that there was a book that you read, which you will be mentioning it soon. But what were some maybe like some guidelines? Like you mentioned, like when in our previous talks that Peter Lynch was one of your biggest role models in investing. Like, could you tell us maybe what led you to pick him, and what are some things that follow from his principles?
Yeah. So I discovered Peter Lynch, I think, on watching like a random YouTube video, and
Okay.
I don't know. I listened to him, and I think it was a really honest guy, a really good person, and I think it was making some good points, and they were reasonable points. Some of the
Okay.
most important things he said is that let's say retail investors have two big advantages. One is concentration instead of diversification,
Okay.
because as we know, fund manager have to adopt and apply some rules. For example, they cannot invest more than 5% of their total fund of their total value of portfolio in one stock. And they have many other limitations. For example, they cannot invest in a stock that has less than this market cap. They cannot invest in a stock that is quoted or listed in another exchange except for the Nasdaq or the NISA. There's many restrictions, right? That they were put in place to protect the investors in the funds themselves.
Okay.
But so retail investors do not have these limitations, can do whatever they want. So if I want to invest 100% of my funds in Tesla, I can do that. And that's a big advantage, because we have to remember that diversification is true that it's meant to diversify the risk. But you cannot think about diversifying risk without diversifying also your returns. So based on your objective, based on your goals, based on your financial ambition and position, you have to accept this. Like if you're starting from 1,000 euro and want to make it 1 million, you cannot diversify, or it will take you 50, 70 years to become a millionaire, right? This is just common sense. So that's one point. The other point is that retail investors are not in a bubble like analysts or fund managers are in Wall Street. So what happens is this is interesting. Like I don't know why, but the human mind perceives stocks as a kind of an abstract thing. Like we don't think of stocks as just companies building products and managed by people. We see them as this abstract thing that you have to do some technical analysis to figure it out, and you never know what's going to happen. But we have to remember that behind the stock there is a company, right? With a business model, with products and people working at the company. And yeah, what happens is that analysts often are kind of alienated by this. They just they are more deep in the Excel model. They do not maybe they do not even try the product that the company is producing, because like probably if as an analyst, if you tried to drive a Tesla 10 years ago, when the Model S came out in 2013, so 10 years ago, right? So if you tried to drive the Model S, probably you will have been more bullish on Tesla. For example, this is just an example, but yeah, you have to try the products. You have to talk to the people that work in the company. You have to believe in the vision, listen to the CEO, CFO, and so on. But yeah, this is an advantage that us as a retail investor have, is that we can observe the world and see like what kind of trends are people adopting, like what shoes are they wearing, what phones are they buying, what cars are they buying. and from this you can really make some good investment decision. Like Peter Lynch used to go to it. He has made his best investment decision by asking his children what they wanted to buy or to go in a mall.
Okay.
So he will just go with his children and wife at the mall and decide and just observe what their children, his children and wife will do, and also all the other people at the mall will do.
Okay. So it's just basically from what people perceive. For example, if people like the product, then it's something worth buying as a stock.
Well, no, it's not like let's say it's not a necessary and sufficient condition. It might be a necessary condition, but it's not a sufficient condition.
Okay.
Because like maybe a product is doing really well, but maybe it's just a really short-term trend with no really big future, or maybe the stock has already priced in the success of the company. Because another thing that really matters is the price at which you are buying a company.
Okay.
Because you can have the same company, for example Tesla, but it's two different things: buying a Tesla at 10 billion or buying Tesla at 10 trillion. It's like it's the same company, but the investments are completely different. So that's obviously another point that you have to consider. But I think the necessary condition to buy stock is that people love the products built by the company.
Okay.
Or at least this is might be a necessary condition for me. Yeah.
Okay. So what are maybe some other necessary conditions, or like what is another maybe like sufficient condition, maybe some of the conditions that are required for you to pick a stock?
Yeah, I think the sufficient condition might be price, because
Okay.
you can even buy like a really shitty company,
Okay.
but if it is at a bargain price, if it's a really good price, then it might make sense to still buy the company, even if it's not a great company. Maybe it has a lot of debt, its financial position it's not great, but if the price is really really cheap, then it might make sense to still buy it. So the price, I think, is the most important thing. And this is interesting, because if you think, when people buy a car or buy a product, the first thing they pay attention to is the price.
Okay.
Like the price really matters when buying things in life. But then when it's about investing, there is not this focus anymore. Like because as I said earlier, we still think of stocks as this kind of magic, abstract things, but they are just companies. Like so, if you want to buy a product or a business, you have to consider the price you are paying for that product or business. So that's
Okay.
So that's really, I think, the most important thing.
Okay, so a necessary condition would be that people like the product, the company has good financials, all of those stuff, and the sufficient condition would be the price, right?
Yeah. But then personally, I don't know. Yeah, but I think price alone is a sufficient condition. Then for me, there are other necessary conditions. For example, a good financial position. So I don't want to buy a company that is in a really messy financial situation.
Okay.
And another necessary condition for me, and maybe this is key as well, is the management team.
Okay.
I want to deeply trust the management team, the CEO, the CFO, the executive, essentially, right?
Okay.
Because they are the one making the decision, so it's obviously it's really important that you have confidence in them, and that they have also some proof of past successes. For example, Elon Musk, Tesla is not the first company that he has created, right? He has created
Okay.
Zip2, he has created PayPal, he has created SpaceX, OpenAI. Then he has Neuralink, Boring Company. Well, it has bought X, created X.ai. And overall, it has at least for now, it has a really clean and good past record, right? So
Okay.
that's a good observation that you can make to have confidence in the management team. Like, what did I accomplish before?
Okay. So for you, it is about the fact that these companies are not in some sort of like financial distress, and the fact that these management teams are visionaries in a way.
Yeah,
The,
I mean, they don't have to be visionaries. They just have to be good executors. Like, they do what they say. They are not I don't want politicians. Like, a lot of CEOs are just politicians,
okay.
and I don't want a politician as a as a CEO.
Okay. Okay. Very interesting.
Yeah.
Uh, but what is it about Elon Musk that makes you, excited to buy Tesla? Like what sort of information was it that just made you go like, okay, this is the guy. This guy can
Yeah.
take Tesla to the next level. Because, for example, PayPal and I think, which was I think called X payment systems
Yeah.
or something of that sort before it was called PayPal, and maybe the previous maybe. I think he also built like this gaming thing when he was like very young, which he sold it for
Yeah.
a much higher price. But those were all things from the start to maybe the exit, right? But for Tesla, he came in the middle, and then he was supposed to take it to the next level. What made you think that okay, this guy can probably take this company to the next level?
Yeah, yeah. First thing, I will correct you in saying that Elon Musk didn't come in the middle of Tesla.
Okay.
He came really at the beginning. Like, I agree with you. It was not one of the original founders.
Hmm.
It was like the first big investor, right?
Okay.
But he started in investing and then participating in the company when Tesla didn't even have a prototype.
Ah. Okay. Okay.
So they just had the idea, and maybe they had some sort of intellectual property, but really limited, you know. But yeah, moving apart from that, uh, I think that the most important thing for me is that he really believes in the vision. Like, he is all in. Like, he is deeply all in.
Okay.
He has no plan B. Like, he is completely invested, and he believes 100% in the mission, and that's really important. That's super important. Like, you don't, you want, like, if you want to invest in someone like Elon Musk, you have to be sure that he is honest when saying, when talking about the mission of the company, and he really is. Like, I've read the biographies, the new one, also the older one. I've watched a lot of interviews, and to me is like super honest. Like, and then he has proven to be a visionary. Like, he doesn't have he doesn't have to prove anything to me, because he already has. When he built reusable rockets, that's that's enough. He's a visionary.
Okay. Um, Moving back to your, in a way, your investing role model, Peter Lynch. There are a few things that he says, such as maybe when you invest in a company, look for like a 10 bagger, which is like a company that makes a 10 times of a return than when you invest. And then a few other things that he also says is like there are certain type of companies that you have to invest in. There are like growth companies. There are like like mature companies who don't have many things going on. Some are in distress. Some are in other sorts of stages in the lifetime of the company.
Yeah.
In all of those aspects, what are some of your favorite categories to invest in, and why?
Yeah, that's a great question. So first of all, I would like to say that the choice of which companies you want to buy should be based on your personality,
Okay.
and it's worth remembering that your personality changes a bit over your lifetime, right?
Okay.
So maybe when you are young, you are a personality that is, I don't know, more propense to invest in growth stocks.
Okay.
Then when you are, I don't know, 60, 70 years old, so maybe you have also lost the edge with technology. Like let's think about what will happen 50 years from now. I don't think as a 70 years old will be competitive with 20 years old investors, like
Okay.
I don't know. So probably when I will be 70, I would like more a company in a old traditional industry of my times, let's say. But yeah, I mean, as of now, I really like growth stocks.
Okay.
But with growth stock, I don't mean like stocks in really hot industries like artificial intelligence or semiconductors. It,
Okay.
you can have growth stocks even in really traditional and old industries.
Okay.
So yeah, but I want a company that is growing at a rapid pace. It has still a lot of room to grow because that's another important thing, right? How much can a company grow? So based on the addressable market and on the market share and on the limitations, how much can it increase its market share? On the vision again, but yeah, you can find these growth stocks even in old boring industries. Like now I'm invested, I'm really positive on Crocs. It is a
Okay.
growth stock. It is a growth company, like no doubt about that. But he is in a stagnant industry, that is the footwear industry.
Okay. Okay,
So yeah.
why did you pick Crocs to go for? Is it because of the recent hype with Crocs and the
No,
accessories that?
I mean, no, not really. Like it's half of the reason why it's the price. It's just really cheap.
Okay.
Like it doesn't make it, you cannot find enough good reason to explain why the market is so negative about Crocs. You
Okay.
just cannot find. You cannot explain why. I tried, and the only reason is that the recent acquisition of a dude is not going as maybe some analysts thought in the short term, but the long term outlook is still good. And another reason is that a lot of people think about Crocs as this kind of short term trend that will
Okay.
evaporate next year, or it was like a COVID thing. But they are missing a bit of the point. Like Crocs has a huge competitive advantage that is the comfort of its shoes. People buy Crocs because of the comfort, and that's a competitive advantage. And 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 I think they are pioneering the this change in culture of dressing, because we will prioritize more and more comfort over appearance. We will care about feeling good instead of looking good in a traditional sense. and so
Okay.
they are they will have a good, great future, I think, as a company. Um, so yeah, that's my thesis on Crocs.
Okay. So earlier you mentioned that that you sort of invested in Tesla, was one of the first stocks that you picked with the, you know, the initial funding that you got from your mom, and then like a couple of months ago you sort of exited that position. So what does your portfolio like look like right now?
Yeah, so as I said, I've exited part of my mom's position in Tesla, but it was more because of some tax reasons, let's say.
Okay.
Now my portfolio, as you will see, that is really concentrated. So I have, as of now, I have a lot of cash, because I have a lot of cash because I had to liquidate part of my portfolio because of tax reasons, and this is because I made a big mistake at the beginning. That was to do everything with a broker account, an
Okay.
online broker account. But then I realized that it was not the best decision to invest long term, and having a trading account in a broker, it was best for me to have an account with a bank here in Italy because of fiscal reasons, and also because of practical reasons. So yeah, I had to liquidate my position on the broker. So now I have a lot of cash because I've not reinvested all of the liquidation. So I have, I will say, as of now, I have, I guess, 50% cash, for no, yeah, 40% cash, 30% Tesla, and 20% Crocs. So I think I'm missing 10% somewhere. So I will say, yeah, it's more like, I think it's more like 60% cash, 30 Tesla, and 10 Crocs. Yeah, like that. 60% cash, 30% Tesla, 10% Crocs. But if everything goes right, I will shift part of my capital into a private company, the biggest private company in the world.
Okay.
Let's see if you can guess.
What private company? What do you mean?
Yeah, so it's the biggest private company in the world. Do you have any guesses?
Like private company as in
It's not listed. It's not public.
it's not listed, it's
privately
not
owned.
public. Okay. And you're gonna invest all your money into the company, or are you gonna move your?
No. I will just move a bit of capital, in the, I will say like 20% of the capital there. But it's SpaceX.
Ah. Okay.
Yeah.
So
Yeah.
how does that work? How do you invest 20% of your money into a private company?
Yeah. Well, it it is all thanks to one of my friend in Bocconi that
Okay.
knows a banker in JP Morgan. JP Morgan is the bank of Elon Musk, so they have some good contacts there. And apparently there will be the possibility of create through this banker that would like to invest in SpaceX as well, to create a special purpose vehicle that will go to invest in SpaceX. So it will be a closed fund that I will participate in. That if everything goes right, we'll be able to participate in the upcoming raising round of SpaceX.
Okay. Interesting. Wait.
Yeah.
So just to maybe like give a context on what this 20% looks like. Maybe in a ballpark, you don't have to mention the exact amount, but where do you think that your portfolio lies in terms of maybe like valuation?
Well, um, yeah. So well, I can say that my goal in 5 years will be to have a portfolio value of 1 million.
Okay.
And I expect from my current portfolio, I will say in the next 5 years, I'm expecting a 5x, more or less. So you can do that.
The math. Okay, pretty interesting to start off with just 1,000 euros and then go all the way up to a potential 1 million now.
Yeah. No. Yeah. Well. Yeah. I didn't start from. I've started actually from with a good amount. Thanks. Well, I've taken some. I've taken a loan.
Mm-hmm.
Because as a student in Europe, you have some really good loans that you can access, and it was super convenient. So I have a bit of that, and then I have my mom and my grandparents. They kind of gave me some money, to start. So I didn't start from 1,000 euro. But yeah, I already I made a really good amount of profit from now.
Okay.
From when
Okay.
I
Pretty.
started.
And you plan to use all of this for stock investing, I suppose.
That's a good question. Yeah, I will say short to medium term, yes. I
Okay.
would like to move a bit in real estate at some point.
Okay.
Um, so, but yeah, I will say that until I have a good amount of capital to deploy, I'm staying in stocks.
Okay. So why move into real estate actually when stocks are going so well for you?
Uh, because I will say probably real estate is. I mean, it's another it's just another mean of investing. I think at a certain point it makes sense to not just be all in stocks and to have a bit of diversification in that sense. So to have a bit of real estate. I think real estate does a better job in preserving capital. I don't think it does a better job in increasing exponentially increasing capital, but I think it does a really good job at preserving capital.
Okay.
And yes, and I'm also fascinated by the idea of actually owning, let's say, material houses and apartments. I think, I'm a bit fascinated also by the idea, so I'm interested in it. Yeah.
Okay. Another question that I would have for you would be, with all of this going for you, do you expect yourself to maybe pursue a career and have this on the side, or would this be would this take a central role in your life?
Yeah, that's a good question. I don't really know the answer. What I know is that I really like it. Uh, it's not. It doesn't have to be your main activity. To be, I think to be, and this is another thing Peter Lynch says, like to be a good stock picker. You don't have to be in a finance guy. I mean, you don't have to work in finance or do that every day, all day. yeah, it will take time. It will be like your main hobby aside of your other career, but it's doable with a limited amount of time. Said that, I probably would like to have to put myself and have some experience in some innovative kind of funds managers such as Katie Wood at ARK Invest. I think ARK Invest. I think it manages actively traded ETFs. They do a lot of good research in for disrupting technologies. They were Katie Wood was the first one, at least in Wall Street on the media to forecast like a 10x in value for Tesla, and what she said as materialized. So I mean, there are people to pay attention to for sure, and it's a really dynamic and interesting culture that they have. So I would like to have an experience that sort of financial institution. I'm not really passionate by the traditional ones. I'm not. I don't think it's for me. But yeah. Yes. And what about you, man? Do you? I don't think I ever asked you if you invest, if you like. I mean, if you are interested into investing, if you think that you will invest at some point in your life.
I mean, as of now, I haven't invested. I have had a lot of reading that has been going on, but I think to me, more than investing, because at the moment I don't think it's of central importance to me. I think it's more like there was this one entrepreneur that said instead of investing in the S&P 500, invest in the S&Me 500. So as in like invest in yourself. And I think that's what I'm mainly focusing on at the moment. But if I were to invest, what would you suggest? Where do you think I should begin? You know, maybe like if someone's watching this and they wanted to begin somewhere, like where would you suggest they begin, and what would be some things that they have to look out for, and maybe what are some things that, you know, some guiding lights for them?
Yeah, that's a really important and good question. I will say to, I mean, I think the most logical thing is to listen to people that have been successful in investing, right? So what I will do is, what I have done is to read books such as One Up on Wall Street by Peter Lynch. That I think that one book is enough to have a good comprehensive way of assessing stock picking. So of the main things to do, to look up for, and more importantly, the main things to not do, to not the main mistakes to not that you shouldn't do. So One Up on Wall Street by Peter Lynch. Then they have asked Warren Buffett didn't write a single book, if I'm correct, but when they ask him to suggest a book, he always suggests a particular author, that is Benjamin Graham, that is he's an investor from the 20s, 30s, and so it's really old. But it's this I read The Intelligent Investor, that is the most famous book by him, and it's a bit old-fashioned, but I think it's worth reading. And then there is another one by Benjamin Graham called Security Analysis. And then there is another one that I've not read, but I bet is a pretty good way to start. It's called balance sheet analysis. You know, like how to read a financial statement, what to look at, like what factors you want to pay attention to, how to read certain items, what are some red flags, green flags. and so on. But then, I will also like view interviews. Like you have a lot of material about Warren Buffett, Peter Lynch, all the other great investors on YouTube. Just watch, learn, take some notes, and yeah. And also, like, to be honest, what I will do is like I will hear like when if they ask someone why did you choose this stock, and it turned out that that stock performed really well. Maybe it was a 10 bagger, so it increased 10x in value. Then I would like to hear what were its reasons to buy the stocks, because it means that its way of reasoning has led to a 10x in a stock. So probably you can use that kind of reasoning for also other stocks. Maybe it was a bit of luck as well. I mean, luck is has a big factor in life and in investing as well. So yeah. But I mean, but in the end, like you will make mistakes. Like I was lucky that I just burn just 1,000 euro. That was my luck. I hope that. But you will make. I will. Everyone will make mistakes when investing. Like another quote by Peter Lynch is that to be like the best, one of top 1% investor, you have to be right 6 out of 10 times. 6 out of 10, so 60% of times. Slightly better than a coin flip, you know. So, and those are the best investors. You can even be wrong nine times out of 10 and still make money if the stock that you invested in perform really well. Like if you invested in Apple, I don't know, 50 years ago and 40 years ago or whatever, and you made other 9 really bad investments, you'll probably still have made a lot of money.
Pretty very, very interesting way to look at it. And a very fundamentally very solid way to look at it.
Yeah, and then maybe like if it turns out that Crocs will fail and Tesla as well, then my reputation is is
Completely
gone.
But hopefully
let's
pray
hope
that
not.
yeah, we pray that it goes to the moon.
Yeah. Yeah, if it does, though, my reputation, like I can say that I have this video attesting my
My
investing
investing.
theory. So it's a double-edged sword,
Yeah.
Perfect. So thank you so much, Marco, for joining us. I'm sure the viewers got a lot of very valuable insights into maybe picking some 10 baggers that's gonna take them to the moon. And it was a pleasure to have you on this podcast. Thank you for so much for your time and for your presence.
Thank you, man. It was really fun. Yeah, it's both fun to be a host and a guest in a podcast, and yeah, it was a big pleasure. And I think you are doing a really good project that will be useful for many people. So that's honorable,
Thank you so much for your compliments.